My name is Ben Reppond. Today is June 26, 2024. Yesterday I covered this, and I wanted to just say this was kind of the highlight, economic highlight of last week. Even though you may not have heard of it, in my opinion, it was the highlight, and that is that the petrodollar, the deal that we made with Saudi Arabia that props up our currency, 50 years ago, it died. It sunsetted. It expired last Sunday, and we did not renegotiate that deal. I don't know why we didn't. Did we try and failed? Did we not even try? I don't know. All I know is it expired, and so that was a big deal because it propped up our bonds, it propped up our currency, propped up our market, and it was good for us, and it was good for Saudi Arabia, and we gave them a military protection in exchange for that, and it stabilized our oil prices, interest rates, etc. So quite a good deal. And so where do we go from here? I don't know. Maybe they're going to try to continue to negotiate something, but now you've got these third world countries who are coming in and they want to buy oil in their currency, not ours, which is what the deal was. And so, and Saudi Arabia is willing to do that. And we do not have the negotiating leverage that we once had with Saudi Arabia. So third world countries are taking our place in negotiating with Saudi Arabia. Okay. Let's get into the dashboards. The first dashboard is on the 6 equity indexes, the S&P, the Dow, the NASDAQ, the Russell 2000, and then the 2 foreign equity indexes, the emerging markets and developed markets. And then the final one at the bottom is the 20-year Treasury bond. So in the left, in the center of the chart is a pink box, and then there's a yellow box. The pink box is what happened last week. 4 out of 6 equity indexes were positive, 2 were negative, and the Treasury bonds was about break even. Year to date, in the yellow box, is 5 are positive, 2 of them quite positive, the NASDAQ 100 and the S&P 500, and the Russell 2000 is about break even, and the 20-year Treasury bond ETF, TLT, is negative by about 5%. To the right of that, you can see green dots and red dots. This shows that these indexes are either above their 20, 50, 100, and 200-day moving averages, or they're below it. Above is green, below is red. So you can see it's mostly green. Above, I indicated there are 22 out of 28 that are positive, and there were 18 last week that were positive. Then I look at the sectors. The S&P 500 is made up of 11 major industry sectors, and do the same thing with them. The yellow box, pink box, and they're positive or negative. There were, out of the potential 44, there were 35 that were positive. Last week there were 27. So for the last week you can see that most were positive and a couple were negative. Year to date, same thing. 9 out of 11 were positive, and the most positive by far is the technology sector, large cap growth. And then at the very bottom there are 2 that are quite negative, and that is real estate and telecommunications. This is the picture of the S&P 500 for 2 years, 24 months. So you can see from October of last year, this will get us through about 20 months. 20 months is that period that covers that black arrow from a bottom to where it is now. We continue to stay above and push above, further above the 20 period moving average. So from a stock market perspective, things look pretty good. The economy may not be as strong as we want, but the stock market is quite strong. This takes, okay, I had 24 months. Now I'm going to compress this into 9 months. The last 9 months of data, and I switch it from a line chart to a candlestick chart. And the candlestick, you know, if it's a kind of a blank candlestick candle, then that indicates that it started low and it worked high. It started low and worked high. If it's red, then it started up and worked down. And there aren't very many red ones. So for every week during the past 9 months, you can see that most of that was positive. Positive for the entire period, but also positive on a week-to-week basis. This is a new chart, so I put the NASDAQ 100 as the numerator. It's a relative strength. NASDAQ 100, the S&P 500 as the denominator. So when it goes up, it favors large cap growth, NASDAQ 100. When it goes down, it favors the S&P 500, which is the broad market. In other words, the large cap growth is not as in favor when it goes down. And you can see from the beginning of 2023 that generally speaking, the NASDAQ 100 large cap growth has been more in favor than the broad market. Then I switch it around just so you can see the other side of it. Let's assume that the S&P 500 is the numerator and the NASDAQ 100 is the denominator. And we get the exact opposite. And so you can see the degree to which there is a decline in the ratio, relative strength, again showing that the S&P, that the NASDAQ 100 is the strongest, and in this case, the S&P 500 is the weakest. Another relative strength chart is growth and value. So when you take the S&P 500 and you take every stock in the S&P 500, 500 stocks, and you say, okay, I'm going to assign you to either a growth stock or a value stock. And when we look at those, we say, and they put them into ETFs. And one of them is SPY-G, which is the growth ETF. SPY-B is the value ETF. So again, you can see from the beginning of 2023 all the way to present that growth has outperformed value, although there are times where value outperforms growth. This compares an 18-month chart, weekly chart, showing the S&P 500 relative to the small cap, Russell 2000 small cap index by IWM is the ETF. And you can see again the same thing from March of last year to present, again, growth. So the S&P 500, the broad market, is stronger than the small cap index. This shows, this is not relative strength, this just shows the long-term government bond, ETF, TLT, and you can see it goes up and down, but generally speaking, it is in a downward trend from where it was about 4 years ago. And that the reason for that is that interest rates have gone up and bond yields have gone up, which causes bond prices to go down. The US dollar continues, this is the ETF UUP, continues to rise. Look at the very end of that chart. It's up and going up even more. And that's what that looks like from about mid-2021. Other currencies, you may say the dollar, we're losing buying power in the dollar, and that's true, but relative to other currencies, we are doing quite well. Okay, this is, go over to gold now, and gold has been going up, and you can see that through the general direction with the black arrow, gone from late 2022 up to present, and it's been, you know, generally up and down, but generally it's gone up. Silver is more erratic than gold, and so from March of 2023, you can see where it has gone. Again, it's gone up nicely, but a different ride, I guess, than gold. When I compare the two, putting silver as the numerator, gold as the denominator, this is what the chart looks like. Certainly a lot of up and down, isn't there? But if you went all the way back to September of 2022, you'd say silver has outperformed gold, but it was a rough ride getting there, I think. Bitcoin has been in a 2 or 3 week pullback, and it still is kind of touching the 20 period moving average, but it's, again, generally speaking, been positive since late 2022. The volatility index, this is something when you're invested in equities, this is something you always want to see declining, because it says the volatility of equities is low when it goes down. Volatility of equities is higher, means there's stock market volatility when it goes up. So it did go up a little bit this last week or so. I think that's a couple of weeks. But it still is 13, and you know, it's gone very high before, so it's still, relatively speaking, in a low range. Asbury Research, they do the Asbury 6, and last week, the last 2 weeks, there were 3 green boxes, meaning that these 6 technical indicators were positive and 3 were negative. Now it has shifted. There is 1 positive and 5 negative. So what this is telling us from these indicators, at least as of last Friday, that these there is more of a negative sentiment than there is positive. Asbury Research does a comparison of asset classes, types of stocks or assets, and one to another. How is this doing versus that? And they do it over 3 time periods, weekly, monthly, and quarterly. So the only 2 that emerged in all 3 time periods that were favorable were low volatility stocks were more favorable than high beta or high volatility stocks, and the US is more favorable than developed markets. Everything else might have 2 time periods, but not all 3. So I think this last week, a number of things shifted from where they were prior to that. And this kind of says the same thing. This is the US versus the world. When you look at the center column, the last month, and the last column, the last quarter, it's nearly all US. However, this last week, look at the countries that came in stronger than the US, but only one of them is stronger in all 3 time periods, and that's Taiwan. The US is stronger than Switzerland, Germany, Spain, Malaysia, Japan, Hong Kong, Singapore, India, China, and the Pacific. I took Thailand because it's the weakest market. I think it's the weakest market in the world right now, and did a relative strength of the US versus Thailand. So if this line goes up, it favors the US stock market. If it goes down, it favors the Thai stock market. And you can see from the beginning of 2023 to present, almost a year and a half, you can see the degree to which the US has outperformed the Thai market. Others are where US is stronger or somewhat similar, but this is the strongest case to be made for the US. Gold and silver. Gold price, spot price, as of last Friday was $23.26, and the silver price was $29.58. Gold was down slightly from the previous week, and silver was unchanged. The gold-silver ratio is still 79 to 1. Now, the monster box of silver bullion, according to my son, Preston, monster box is 15,950. That is 500 rounds of generic silver. That includes a $2.32 per ounce markup commission, if you will, that I think somehow the retailer and the wholesaler end up splitting that in some form. And that makes when you add the $2.32 to the spot price, that makes the cost per round in a quantity of 500, makes it $31.90. And if you got just a tube of 20, it would be $32.40 per round. This is prices as of last Friday. All-time highs are at an all-time high. Interesting, isn't it? I believe that, as I told you earlier, I mean, we're riding the wave of this market and we're benefiting from it. I'm thankful for that, but I also know it's not going to last forever. So I'm skeptical, and I am conservative, so I think in terms of preserving money, but I also know that when things are trending, when prices are trending up and the trend continues and the trend line has not been broken, you basically stay with it. And that's what we're doing. We're staying with it. There will come a time where we won't do that. We will get out. But for now, I guess all-time highs are at an all-time high. So thank you for watching. If you have questions or comments, leave them in the comment section below.